Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, daily chart, and we talked about the bears needing to push down to 23.30 to save the band ride. Well, they did that, and basically from there on out, it's been all bulls. I mean, the reality is, everybody, it's been all bulls since we printed 22.75 on Sunday night. Now the bulls have to finish. The bulls, and the only way the bulls finish is by getting up over the top of the daily mid-band, which is sitting at 48.35, 48s. They've got to get over that. They've got to convert it. You can see they've tried multiple times since the initial break back on the 21st of March, to no avail. Okay. Assuming the bulls can get that done, then it opens up a move back to retest this rejection area from April the 5th at 23.75. Along the way, you've got the upper band on the daily, which is sitting around 65. But I don't like calling out bands because they are moving targets. They change constantly with price. So for now, as we look here at the hourly chart, you've got to look at, here's your low from Sunday night. There's your lower low. Mid-band resistance, we battled all day over 38 to 41. Yesterday was a really sloppy trade. Very sloppy trade. But in the midst of all that, the bulls were able to hold the lower daily Bollinger Band as support. So yes, on the daily chart, it looks like, we came back in and we saved the band ride, right? Well, what did you save it for? You saved it to create a higher low and to create support at the lower Bollinger Band. That typically opens up a move to mid-band. It played out really slowly, though. We have traded as high as 46.5 overnight. Today is all about whether or not the bulls can convert 48. So I'm really looking at, call it 44 to 48 as a zone of price that's going to have to be dealt with today. One side or the other is going to have to convert it, and the consequences to the side that cannot convert it are pretty dire. I think we've got another 20 to 30 handles on either side of these inflection points, and you can call the inflection points all the way from 38 to 48. You've got 10 handles of inflection point for longer term time frames here. And you got a big move down if it becomes resistance, and you got a big move up if it becomes support. And a lot of this week, a lot of yesterday, and maybe a lot of today is going to be about fighting it out over those 10 handles. So to the extent that 38 wants to be support today and 48 wants to be resistance, then you're going to have to put your range trader hat on and deal with it that way. But for now, at least on the first look through, you've got to look at the daily mid-band as potential resistance. It's held in price all week, and it's been fairly reliable. If the bulls are going to make a run, then they need to get up over the top of it and then hold it and convert it to support. There's a lot of day left. So as we head into the regular session, keep an open mind. Have all those parameters in your mind, and then just trade what you see, and most of all, respect risk. Because when it gets whippy and it gets sloppy, if you get stubborn, you can get yourself into real trouble. All right, take care, everybody. Back with the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.